Jonathan Corpina is with us, Senior Managing Partner, Meridian Equity Partners. Jonathan, great to see you. I continue to see this market with a little back and forth. Yesterday, I know you were talking a little bit about Cuomo, and he was using phrases, a new phase and the reopening, and that brought some optimism to the market and gave us a little bit of a boost. Today, we have Dr. Fauci with a little bit of a more cautionary tone, particularly if there's a second wave. So it's very hard to navigate the markets and the reopening. Your thoughts?
It is, and that's why we're essentially flat on the day right now. I think yesterday, we've been waiting. We're 7 weeks into this, and we've seen a light at the end of the tunnel. It was very far away. It's getting closer. Governor Cuomo's comments yesterday brought that light closer. We're getting closer to getting back to whatever our new normal is going to be. Reopening of our economy, reopening of our monetary stimulus that'll get our economy flowing. And I think those are the headlines yesterday that investors really wanted to see and really wanted to pay attention to. But now you come into today, we've got Fauci speaking in front of the Senate from remote, and his comments are clearly ones that I think we can't deny and we can't argue against. And we're hoping that they were different, but in actuality, they are the truth. If we open up too soon, this market's this could lead to some serious conditions down the road. They are talking about this coronavirus coming back September, October, November. Prepare accordingly to that. The bright side is that he was somewhat optimistic about a vaccination coming to market within the next year. I think that's going to be clearly something that our market and our economy is going to react positively to. But at this point right now, we're seeing, and I think overall nationally, you look at the state of New York. Everyone's really focusing on this. So that's why I use Cuomo as that example, that the markets are focusing on that, because his headlines of what's happening in our neighborhood here is clearly something that's going to affect the economy.
Well, for sure. I mean, and, you're right there in the financial capital of the world at the New York Stock Exchange. And Cuomo did use some very strong language. It's a new phase, he said. We're coming out the other side. We start a new chapter today in many ways. Those were some of the phrases he used yesterday. And it brought some optimism. And it almost feels like a joke. I mean, are you going to tell me things are going to open up for maybe the end of July and August and then in September close down again because we've wreaked havoc by leaving our homes? So it really, it's quite frustrating. I know that you're on the inside there and deal with a lot of important people there at the New York Stock Exchange. I mean, what are you hearing about the New York Stock Exchange?
Nicole, slow and steady is going to win this race here. There isn't a switch that you flip on and off, right? We're going to have to come back into our workplace. And I think this doesn't just go for the New York Stock Exchange. That goes across the board. We're going to have to come in back very slow and test the waters, come back with a scaled down capacity on the floor, do our job, do our operations, and see where we can expand and where we can't. And that is certainly going to take time. And I think the overall thought process here is get your policies, procedures in place, get safety number one on your list of things to do, and make sure that when this does come back, and all the academics are saying that it will come back, make sure we're prepared. We were not prepared for this, and that's not a knock on anybody. But the fact of the matter is that nobody was prepared for this. So now we can see, looking forward in 4 months to 5 months, that this might come back.
Yeah. And, I have so many things I want to go through, like bullets, one at a time. But quickly, Grubhub's halted, volatility pause here. You know that there's talk that Uber may have a real interest here. Wedbush comments on the report saying that clearly this would be an aggressive move by Uber. There's others who say it could bring profitability to Uber if they do take over Grubhub. Any thoughts on this potential deal that seems to be a possibility? And certainly we see Grubhub halted here right now at 63.87 due to volatility.
Yeah, just a couple of thoughts, two thoughts. One is, I think you're going to see more opportunities like this where there are larger companies out there with big balance sheets and cash on hand to spend, and they're going to look at other companies that might be good, partners for them or good components within their structure that they could get much cheaper than they could 3 months ago. That's one component. The other side to this is that Uber is looking to be the next type of Amazon, right? And Amazon has gobbled up all these other competitors of theirs that have been in their space and brought them under their umbrella. Uber's doing the same as far as the food delivery process is concerned. They're going to want to bring that all in-house together and have somewhat of a monopoly on that.
So tell me about technology. That was an area that you thought was leading. Do you still like tech going forward? I mean, what do you tell people to do with their money right now? I mean, we've had a good few weeks, right? We had a great month of April.
Yeah.
What are you telling people to do with their money?
Right. You look at the NASDAQ, we're up, it's amazing that I'm saying this, but we're up, 2% on the year right now, considering everything that we've gone through. Technology has been a sector that has been somewhat immune to this. And we've seen this during earnings season. A lot of these technology companies reports are saying that they've actually flourished during this time, and they've used this opportunity to expand into other areas that they thought that they would never get into. So have you missed the boat on that yet? I don't think you've missed the boat. I think this market still has more upside than downside in the short period of time. But technology is one that's clearly floating there. And we've spoken before, and I saw George, your guest before, talking about real estate. Real estate's going to be a tough market to really get into now, from many different aspects. And one of them is just the work from home. We're seeing that working from home does work. The productivity levels are there. So what happens to new rentals and new leases that come up in the next few months or few years? Companies are going to think about that 20,000 square foot space going down to 10,000 square foot. So from a REIT point of view, commercial real estate, I think that might be a soft sector for a little while.
Let me ask you to comment on what Koskinen said today over at Goldman Sachs, Jonathan. I mean, he was just talking about a little bit of upside potential, maybe 2%, but the downside risk was there for 15%, and here's why he said it. First of all, he said 40 companies cut, eliminate, suspend dividends. Cap spending down probably 25% in the next year. Election risk, the prospect of corporate tax rate that might go up, bank loss, loan loss provisions. Those are some of the things that give us some downside risk. Are you more worried about the downside risk? I mean, you were on with us shortly after the 23rd low, and you said that you thought the bottom was in, and we've had a beautiful run since then. And it's impossible to predict, but do you think we have more downside risk, or we can continue to trickle higher?
I think we're going to continue to trickle higher. And yes, those factors are out there, and there are going to be obstacles in our way. But I think what's happening during this time is like this learning process that we're going through is going to prepare us for next quarter and the quarters after that. And corporate earnings are going to look different moving forward. And policies of corporate buybacks and different dividends are going to look different moving forward. This is just the world that we're in. And you're going to have to either embrace the change or fight against it. I think we're getting to a point, not just quite yet, it might take a few more months, but that people are going to be embracing what this new normal is going to be. The corporate expectations, everyone has some negative, mostly negative, some positive effects from what's been going on with coronavirus. And what's that going to look like down the road? How is that going to affect corporate earnings down the road? I think investors are starting to get a little bit more comfortable with the fact that the next few quarters might be a little soft. That being said, even though it doesn't look rosy, the market likes transparency. The market likes that information. It can price it in. Like jobs last week, those numbers we knew were going to be horrible. They came out pretty much where everyone was expecting, and the market kind of absorbed it. Once again, the market likes transparency. If it knows the bad news ahead of time, it can price it in.
Yeah. I don't know. Cuomo's talking about his haircuts. What are you doing for haircuts?
I'm just letting it grow, and we'll figure out where it goes. My family hasn't said that it looks horrible yet, so I take their guidance.
All right, Jonathan Corpina, thank you. Senior Managing Partner, Meridian Equity Partners, thank you very much.